Bitcoin.
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 What is Bitcoin?
Bitcoin.
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 It's Bitcoin season.
Bitcoin, the digital currency created a dozen years ago as an alternative to cash, is exploding in value. Will it last?
Bitcoin. You've heard of it by now.
That some bigger fool is going to buy it at a higher price.
Bitcoin is worthless artificial gold.
But what is Bitcoin?
A lot of illicit activity. Now, that is not something I think the world needs.
Is it money?
The asset itself is creating nothing.
I think it's a scumball activity.
I would short it if there was an easy way to do it.
Bitcoin.
Is it a currency?
You know, the underlying technology is here to stay, so it's not going anywhere. I think you're going to see the price of Bitcoin skyrocket again.
Bitcoin's like rat poison.
And you're saying they're all wrong?
Yeah.
Digital gold?
Very bullish on it.
People have made fortunes out of Bitcoin.
It's Bitcoin. I'm like everybody else saying, if it works, I should own some. But frankly, all I've seen so far is volatility.
There is no property invented in the history of mankind that is better than Bitcoin. Not land, not gold.
Or
not
is it
silver,
all
not stocks,
a scam?
not bonds. Bitcoin is the apex property of the human race.
To understand Bitcoin, and why some people have such conviction in its purpose and value, we first need to understand money. Money was first created about 40,000 years ago to facilitate trades and exchanges as a measure of value. Objects that occurred rarely in nature, and whose circulation could be efficiently controlled, emerged as units of value for interactions and exchange. These included things such as shells, copper, obsidian, amber, silver, and gold. Things of scarcity. Scarcity equals value. In 1944, the US dollar was first established as a world currency through what is called the Bretton Woods Agreement, becoming the most dominant currency in the world. Originally traded as a coin, valued by its weight in gold or silver, and later traded as a paper note, which was redeemable in gold. In 1971, President Richard Nixon implemented a series of economic measures in response to increasing inflation. This became known as the Nixon shock.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
The dollar was no longer fixed to the price of gold, and in replacement, a new regime based on free-floating fiat currencies and the introduction to fiscal policy. This new policy would enable the government to use government revenues collected from taxes and expenditures to influence a country's economy. The theory of the new fiscal policy is that government changes in levels of taxation and government spending influences aggregate demand and the level of economic activity. Fiscal and monetary policy are the key strategies used by a country's government and central bank to advance its economic objectives. This implies that fiscal policy is used to stabilize the economy over the course of the business cycle. However, in times of crisis, in the likes of the 2008 financial crisis and the most recent COVID-19 pandemic, the government and central banks have responded by printing trillions and trillions of dollars. Many believe this will lead the economy into hyperinflation.
Once I understood in 1971 when Nixon took the dollar off the gold standard, and I knew something was going to change. You know, I don't know how much longer this financial system can last, and I see the end coming.
Yeah, so my long-term outlook is to eventually see a higher rate of inflation with a degree of currency devaluation.
Whether you believe in hyperinflation or not, it is safe to say things seem to cost more. The truth is, our dollar is worth less. Take a chocolate bar, for example. The price for a Hershey's chocolate bar in 1908 was 2 cents. Today, that same chocolate bar costs over $1.50. But it's the same chocolate bar. Same recipe, same ingredients. The value of the chocolate bar has not changed. It's the value of the dollar that is worth less, and therefore you need more of it to purchase the same chocolate bar. It was almost the turn of the century. We had officially entered the beginnings of the digital era. In 1991, a technology called blockchain was first introduced to cryptographically timestamp documents so they could not be tampered with. Almost 2 decades later, in 2009, a person by the name of Satoshi Nakamoto, who remains anonymous, provided details of how the technology was well equipped to enhance digital trust given the decentralization aspect, and hence, Bitcoin was born. Unlike services like Venmo and PayPal, which rely on the traditional financial system for permissions to transfer money, Bitcoin is decentralized. Any two people, anywhere in the world, can send Bitcoin to each other without the involvement of a third party. Each and every transaction is tracked on the blockchain. It is a record of every transaction ever made using Bitcoin. But unlike a bank's ledger, the Bitcoin blockchain is distributed across the entire network. No company, no country, or third party is in control of it. Anyone can become part of that network, making it completely transparent. Bitcoin's maximum supply is 21 million. And that's all there'll ever be. When a cryptocurrency is released, the creators can set the parameters which cannot be changed after the fact. Locked in from the start, these rules effectively make Bitcoin a truly scarce resource with a ceiling on the total amount that will ever be available. That's where the comparison to gold falls a little flat. Because gold is constantly entering the markets as new ores and pockets are discovered, making it only a relatively scarce resource. Many say Bitcoin is the only finite resource known to man, making it the most scarce resource in the world. Take a minute to compare the different money traits of these assets. Let's focus closely on the bottom half of the chart. Starting at the category scarce, you can see gold only scores a moderate rank. Although scarce, gold continues to be mined and added to the world's overall gold reserves.
It's incredible to look at, but it doesn't do anything. Why is it so valuable?
Partly because it's rare, so it's in limited supply, you can't keep making it. The gold here is a store of value. It is globally recognised. People want gold, so it creates a market in itself. It doesn't change value as much, for example, as currencies. This is a lot more durable than investing in chocolate or something like that.
Fiat, however, scores low. This is primarily because governments can print as much money as they want, making it rather plentiful rather than scarce, and therefore reducing its overall value. Bitcoin is the only one that is not issued or controlled by a third party, the only one with a true finite supply that cannot be replicated. Today we witness governments spending more money than ever before. Inflation is imminent. Is Bitcoin a way of the future? Or is it all just a scam?